Hey, it's Todd Ault, and welcome back to Wall Street Words. Today's word is duration. Duration is like time, but when you think of a bond, let's say the bond is 10 years. The bond pays interest for 10 years and comes due at the end of that 10 years. Very simple, right? But duration risk or duration change happens as the bond gets closer to maturity. So remember, a bond's trading, the first year you get it, it's a 10-year bond, it's 10 years in duration. But by the time the bond gets 7 years old, it only has 3 years of duration. And that changes the focus of the value short term because interest rates could be higher or lower. That duration risk is important to understand why the bonds are valued at certain times versus sort of this cliff payoff at the end of the 10-year period. Today's word is duration, an important part of understanding the duration when you're investing in bonds. It is not the time, but the duration.
Hey, thanks for watching Wall Street Words. Please subscribe and hit that bell below. If you think this video adds value, please share it with somebody. By the way, if you want to watch more Wall Street Words videos, there's 2 videos right here you can watch right now. There's new videos every day. Thanks for watching Wall Street Words. Always great things happening here.